Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we did see declines for the major indexes on the heels of the Fed raising interest rates by another half a point. But Ken, all in all, it's not like we fell to pieces in a disaster here today. And as we were kind of joking before we started, better than getting poked in the eye with a sharp stick.
There you go. Yeah, I mean the losses got pretty intense there for just a little while, but we did manage to close off lows. We had lower volume, so all in all, the declines seemed to be fairly orderly. So we'll take that. We'll get into more in the Fed, but also take a look at three stocks. Solar stocks continue to work very nicely. So let's take a look at ARRY Technologies, ARRY. Also want to take a look at Wingstop, a restaurant stock that continues to look good here. Almost a new base in place here, WING. And finally, Modine Manufacturing, MOD is the ticker here. Pretty good technical picture.
All right, some interesting tickers to check in on there. But first, let's take a look at the major indexes. The NASDAQ today finishing down 0.75%. We also had the S&P 500 down 0.6%. The Russell 2000 off by 0.5%, and the Dow closing down 0.4%. And we can also show an intraday chart here just to show you how, per usual, on any Fed-related announcement, the intraday chart starts looking like an EKG with the volatility really picking up when the statement comes out, then when you have the press conference. So we did manage to close off lows, as you said, Ken. But what do you make overall of what went down today in the market, this reaction, but also the implications of the Fed rate decision today?
Yeah, so the 50 basis point hike was widely expected, and we will see another rate hike in February. The market is still, tossing it back and forth whether it's going to be 25 basis points or 50 basis points. The issue is that there could be more, not many, but there could be more rate hikes after the February meeting. When Jerome Powell said today that inflation risks remain to the upside, so that is definitely more hawkish than dovish, and that the FOMC needs to see substantially more evidence that inflation is coming down. So we're getting these good readings from the producer price index. We got recently a good reading from the consumer price index. Inflation is still very, very elevated, and the market is just still worrying that that inflation could be entrenched, and it really could be a drag on corporate earnings next year. So the market is not out of the woods yet. I thought that the Fed's tone was more hawkish than dovish today, but we did manage to close off low. And a lot of stocks out there still acting pretty well. It's not like we're seeing sell signals everywhere. There's still a lot of decent looking charts out there. So still optimistic for a year-end Santa Claus rally here. But I think the takeaway from today's meeting is that the Fed realizes it still has a big job ahead of it to get this inflation down to this 2% level. It's probably going to take a while.
Right. And we'll see what tomorrow brings, because we know that sometimes there can be a counter reaction the day after. So we'll keep an eye out for that, either a continuation of trend to the downside, or we'll have to see what tomorrow brings. But as of now, it does look like we are developing a trading range here. Here's a look at the NASDAQ in that trading range since basically mid-November, so a little over a month in this sideways pattern here, having a hard time breaking out above, but hasn't crashed down, broken below those lows. Let's also take a look at the S&P 500, still seeing resistance at that 200-day line. And when you draw a declining tops trend line from the highs, on the downside, still holding that 21-day line. But Ken, talk to us about some of the levels that you're looking at, and maybe at which point you would either get more more bearish or more aggressive on the upside?
Well, we just need to see a decisive retaking of this 200-day moving average with some volume. In fact, if you go back to the Nasdaq chart real quick, I just wanted to point out, reasons to be a little bit optimistic here, and something we've been talking about on IBD Live is all of these up sessions in strong volume for the Nasdaq. In fact, you're really not seeing a lot of heavy volume down sessions. We wiped 2 distribution days off the Nasdaq's count yesterday, so there's just one higher volume decline that's noteworthy here. But the technical picture of the market still, just still reminds me that it's still a challenged market here. So back to the S&P 500. You can see the Nasdaq still has a ways to go to get to that 200-day line. So we need to see the S&P 500 really, break out of this downtrend. It's having problems doing it right now, but if we can see, some renewed signs of institutional buying, that would certainly help the market's cause here. Remains to be seen if we're going to get it, but. We need to see this index start to live above the 200-day moving average. That would be a positive.
That it would. Let's also take a look at the Dow 0 DJIA, still right around that 34,000 level, also holding support at its 21-day line. And we're about to see what looks like a golden cross here with a 50-day line getting close to retaking that 200-day line as this blue chip index continues to outperform, Ken.
Yeah, not really dealing with resistance at former support levels here. Just the Dow kind of holding near these, short-term support levels. So it's really a totally different technical picture that the Dow offers compared to the Nasdaq and the S&P 500. So, encouraged to see the Dow here at 34,000. Looks like it's a level that it needs to get back above this round number, but certainly the strongest index out of the 3.
And we'll take a quick look at the Russell 2000 as well. Here's IWM holding above the 50-day line on the downside, hitting resistance at the 200-day line on the upside. So yeah, Ken, it seems like it'll be interesting to see which way we will eventually break out of this trading range.
Yeah, we've been sort of commiserating about the lack of actionable setups. There are some here and there, but you just never really know if you're going to get positive feedback or not. Sometimes they work, other times you're sitting on a loss. So, market direction is still a little bit unclear here, but. Again, we're going to look at 3 stocks today that are acting well. I'm still seeing a fair number of decent charts out there. The thing is that, for stocks to make meaningful headway, you really need to see kind of new money coming in from the sidelines and, more higher volume gains. And we're just in this kind of low volume period for the market right now. So it's challenging. But again, I'm still holding out hope that we can get a nice little Santa Claus rally. Remains to be seen what's going to happen in January, because there are very real concerns about, a recession. I thought it was interesting. I know we'll look at the that 10-year yield
Yeah, let's pull it up.
Yeah, to me, I think the Powell's tone sounded more hawkish than dovish, and so maybe some people might disagree with that, but it was interesting to see that 10-year yield really couldn't, last check, it was actually down 2 basis points to around 3.48% right before we came in. So you clearly have a bond market here that's still worrying quite a bit about a recession for the economy next year. But I was surprised that rates didn't, move up a little more based on what Chairman Powell was saying.
Yeah, that's definitely a good point there, Ken. And from a sector perspective, let's check in on solar stocks and biotechs. So here's a look at TAN, looking pretty interesting here in this setup.
Yeah, two ETFs that are looking good here. We'll look at TAN first, and yeah, you can see this is just a nice technical setup here, getting very close to this. I think that's 84.18, little pivot there, but up for 3 days in a row. Volume has gotten heavier the past 2 sessions, so wouldn't be surprised to see this one. The solar group is so strong that I wouldn't be surprised to see this one make a bid to move above that buy point. But a good one for the watch list, and there were a lot of stocks that closed near lows today, but TAN managed to hold on to a pretty decent gain today.
Yeah, and we'll take a look at one name in this group here in a second. But first, IBB a biotech ETF that has some relatively heavy weightings in its top 10, and it was up about 0.5% today after a nice move on Tuesday after some support at the 21-day line. So even though pattern recognition isn't picking up a handle here, this looks like handle action to me.
Yeah, it does, and I think 136.89 is a good pivot here. And when you see the stock at 136.73, it's certainly not stretched, not too extended here. So I think IBB, if you're looking for an ETF, seems like it's in a good area here where you don't have to worry about chasing it or worrying about chasing performance. Sitting right near a pivot here, and I've just been impressed by the stock's relative strength. So still think biotechs have a good chance of working this year, and wouldn't be surprised to see IBB have a good 2023.
Yeah, at an interesting level here. And now let's take a look at some individual stocks. So here's ARRY Technologies, ARRY, standout in the solar group, especially with today's action, Ken. We've got that RS line, blue dot there underscoring the stock's outperformance versus the S&P 500 as it breaks out of this cup with handle here. Looks like a pretty strong close to me with the stock up 8% today in some volume.
Yeah, looking at ARRY's chart, you wouldn't know that we were kind of volatile with the indexes, down sharply and then going back to break even and then down again. So, but ARRY was able to just hold the gain, even when the Nasdaq was down more than 1%. This one was still,
Looks
holding up
like a normal day.
Exactly. So, solar stocks continue to work well here, and this one is just 5 cents above an entry. You had pretty good volume in the stock today, up looks like 65% above average. So good volume, a relative strength line near highs. Now stocks crossing buy points and good technical setups like this have been kind of a mixed bag. We're not exactly in a market that's been friendly to technical upside breakouts, but if this one works and maybe we get some follow through tomorrow, I know people that bought today are going to be looking for follow through tomorrow. So is it going to be able to extend gains, or is it going to fall sharply below the buy point again? We'll have to see, but good performance today for ARRY.
Yeah, and I mean, this is a growth stock here. So I feel like this also will be potentially a good tell for how this market is treating growth stocks.
Yeah, it's a high multiple stock too. I mean, look at the trailing PE ratio of 121. People say, why would I buy a stock with a PE of 121? But look at the PE in context to the company's growth rates. So you've got huge growth, and then you've got these annual estimates, 750% growth this year, and then ridiculously strong growth also in 2023. So by definition, this doesn't really look like that expensive of a stock to me based on the growth projections here. So looking just fine.
All right. Hopefully it works. We want to see stocks working, right, Ken?
That's right.
That way we can get more confident about
just underlying market health. Yeah,
exactly.
I mean, just to see more stocks working. We don't like to see these violent reversals, and a day like we had yesterday where we were just very volatile and whipsaw.
All right. Well, we'll see what hand we're dealt here by the market. And Wingstop, another stock to check in on. I know, Ken, this is one you've been watching since that breakout of a bottoming base here on its last earnings report, recently with a nice test of the 50-day line and trading in a sideways formation here. Maybe even, does this have a new base on the weekly chart? Nope, not quite yet, but maybe by the end of this week.
Yeah, exactly. That's why I wanted to talk about it, because it's really consolidating well here above the 10-week moving average. You can see that earnings breakout was very, very powerful. It was just absolutely a blowout quarter, and then this kind of sideways consolidation, almost 5 weeks long. I checked the correction in this little almost 5-week consolidation. 14.8% from the peak to the trough. So it qualifies as a flat base, just below 15% pullback, like that it's holding support here. So it's still a relatively small position on leaderboard, but we'll look to add to the position if this thing can break out above this recent high. It's going to need a improving market conditions to
Right.
work, but we would not be averse to increasing the position if it gets closer to that 170 area.
Okay, and last but not least, let's take a look at ticker MOD, a trucking stock, maybe a little bit on the thinner side here, but trucking seems to be an area of interest right now. And we've had two breakouts for this stock as it turns around. We'll take a look at the weekly chart here. This is the first test of the 10-week line since its last breakout.
Yeah, I mean, this is a fairly straightforward chart. You had a beautiful breakout from a cup base with good volume, and then a very orderly pullback. So this is what a solid first test of the 10-week moving average looks like. I think the stock is actionable for those that maybe have been following Modine and want to start a small position. It's about 6.5% or so above the 10-week moving average. So it just doesn't seem too stretched. Really showing great relative strength, and this is just really a good example of what conviction support at the 10-week line looks like. Volume, again, we're in kind of a low volume period
Right.
for the market, but the fact that the stock is up near its weekly high really looks like a good first test here, and wouldn't be surprised to see this one continue to work well.
All right, well, thanks for putting it on our radar, Ken. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details. You'll get the team's take on how to roll with the punches with this new Fed decision now out. How's the market going to continue to react, and how should we react to that reaction? We'll tune in tomorrow, investors.com/IBD Live, for our team's analysis. We'll see you then, and we'll also see you right back here tomorrow at the close.